If you apply this correctly, you're going to be able to at least 10x your risk to reward of every single trade. And it doesn't require anything magical or anything different. All it is a small tweak, one extra confirmation on what you're already doing. So let's hop right into it. Now, what we're going to be doing today is basically doing a case study on this ES futures trade I took, which is currently floating right now at a 1 to 37 risk to reward with higher targets. Now, firstly, we have to go into the theory in the classroom before we get to the application. So it's very, very simple. So all you want to do, right, is firstly identify your point of interest. Now, we're not going to get into point of interest today and what I use and how I validate them and how I invalidate them, but it's firstly simple. Once you find that point of interest, and for me, it's a Wyckoff schematic. And obviously, once price has now come to one of my key zones, so instead of just blindly jumping in when the market comes down and entering like this, what I'm going to do is add one extra step. And what that involves is understanding the fractal nature of the market. That when you see these highs and lows, the market will create a lower time frame Wyckoff schematic in that area. So, and it is just a law, right? The only way the market can move is if you're seeing enough buy orders being filled or enough sell orders being filled. And those orders have to be accumulated or distributed before the market will actually move. So what you'll see here on these highs and lows, and go and back test it, don't take my word for it, go look on the charts. Every high and low on a lower time frame will have a lower time frame distribution inside of it or a lower time frame accumulation inside of it. Let's say we go to the market and we go and find a random high or a random low. If we go look at, for example, this high up here on a lower time frame, it's not just going to be market goes up and then reverses. It's a V-shaped recovery. Get out of here, bro. If we go on a lower time frame, we'll be able to see our distribution playing out where we've got our trading range, our buyer's climax, automatic reaction, secondary test, up thrust, and then finally a UTAD. And all this is on a higher time frame, if you zoom out, is just a random high, right? And now again, we go to a random low, right? Or we go back and find that low, we can see what the market does is it creates these accumulations. And again, on the higher time frame, it's just a singular low. So instead of just coming in and blindly just buying here with the stop loss below the low and then targeting that high to get maybe the 1 to 2, the 1 to 3, the 1 to 4, the 1 to 5, which is still decent, what we can do is use that knowledge that this low will be a micro accumulation and then jump down to the relative lower time frame. So if this is, for example, a 5-minute point of interest, I'll go down to the seconds time frame and catch an entry, which was what this trade was on. So what I'll do is I'll go down to the lower time frame. Once it comes back to this zone, I'll literally look on that seconds time frame for my lower time frame schematic. It will print it, and then instead of taking my entry where it was, I'm now going to just enter off that lower time frame. And my stop loss is going to be based on the lower time frame structure point instead of the higher time frame structure. So look, instead of having our stop loss below here, we're putting it below here. And the reason why we can do that is because when you see that lower time frame accumulation confirm, that's showing you the exact point that orders are being filled. And now once it gives the sign of strength in the break, right, if we refer back to our accumulation schematic, once it gives the sign of strength in the break, that's what actually validates our accumulation to be valid. And now we know all their orders have been filled. If this accumulation was validated correctly, there's no reason for the market to come below this spring anymore. Right? There's no reason. So we don't need to have our stop loss and give the market room to breathe. Breathe what? What are you breathing? Right? You're breathing something you shouldn't be. Once you know the exact points where orders are being filled, that's how you can refine your entries. So you can use your entry and your stop loss on the lower time frame, and you continue to target that higher time frame target because you're in higher time frame demand and you're following that higher time frame move. So again, if this is a 5-minute, I'm still targeting this 5-minute high. I'm just going down here on a seconds time frame and taking the entry and basing my stop loss on the seconds. Now, you can't go from an hourly to a seconds time frame. You have to make sure you're in the right relative time frame. So for example, if you're on the hourlies, you then go to the minutes. If you're on anything below the 15-minute, you then go to the seconds, right? And by using that lower time frame entry and stop loss and the higher time frame target, that's how you get the bigger risk rewards. Now again, before you say we didn't take these trades, bro, we literally shared these inside the inner circle like we do every single week. And if you want to be part of the inner circle and get access to my live trainings and my actual one-to-one mentorship, I am now opening my Master of Coin mentorship program. So anyway, if you want access to that, you can go to the description. You can write me an email, you can apply, or you can message me on Instagram. The options are yours. So what we have here is our Wyckoff accumulation, right? And we got our final spring here. And after our sign of strength, what I'd be doing is looking for that entry off the 50 and the 80%, right? But instead of just blindly taking an entry off this 50 with my stop loss below the 80 to then target this first high, all right? That's only going to be a 1 to 2 risk to reward. I don't want a 1 to 2 risk to reward, but by using this refinement, we go to a 1 to 17 risk to reward. And again, all we do is go to that point of mitigation, drop down to a lower time frames, and just base our entry on the lower time frames, right? Let it create that trading range, let it give that manipulation. After the manipulation, place your entry here. If you haven't seen the video on the fibs, go and watch that. But obviously what we do is take one entry on the 50, then we offset it and take one entry on the 80 with stop below the low. Sometimes she'll trigger both, sometimes she'll stop one out and go off the 80. That's entirely fine, but I'm just splitting my risk across 2 trades. And this is how I maximize my risk to reward ratios. And then from there, you can see she comes in and obviously flies towards our target. So all we have done there to increase that risk to reward is we've just looked for the same entry model just happening again inside the point we're anticipating a reaction from. That's all you need to do. So again, let's go for another example. Instead of just blindly having my entry at my point of interest, right, with a stop there, and going for maybe not 1 to 5, 1 to 6, not bad, almost 1 to 7, right? Or it depends where you put your stop loss. But in this case, if I was going to do it, I'd have one at the 50 stop over there. For me, that's not worth it. That's not my 1 to 10. All I'm going to do is just dive. When she comes back to mitigate at the reaction point, I'm going to dive down to a lower time frame and just look for my entry model. And obviously we know she doesn't validate the distribution. We just play the redistribution. And then we can see we're just taking the same entries just on the lower time frame with our stop loss based on the lower time frames with the higher time frame targets. And that's how we maximize our risk reward ratios. Very, very simple. So guys, if you did like this video and you did get some value, don't forget to drop a comment. One thing you liked, one thing you learned. And of course, if you want to see any more content, let me know because I've got so much more stuff coming on this channel. Listen, we just hit 7,000 subscribers. We're going to hit 10,000 in the next 3 months. That's my goal. So get ready for so many more uploads from day in the life videos, psychology, technical analysis, market outlooks. Yo, we're going to drop so much sauce. Make sure you're ready. Share this video with 3 friends. And I'm going to see you at the top from the top because you already know, man, that bottom is way too crowded. Sheesh.